You know, I turned 94 this year, and I'll be honest with you, at my age, people expect me to sit in Omaha, drink my cherry Coke, and talk about the same 5 stocks I've held since 1965. And mostly, that's exactly what I do. But every now and then, something comes along that's big enough, real enough, and honestly exciting enough that even an old man like me puts down his newspaper and pays attention. The space economy is one of those things. Now, before you change the channel thinking, I've lost my mind, stay with me. Because what I want to talk to you about today isn't really about rockets. It's about something I've understood my entire life. And that's where real wealth actually gets built. And more importantly, where it doesn't. Let me start with something that happened during the California gold rush in 1849. Hundreds of thousands of people rushed to California chasing gold. Most of them went broke. Broken shovels, broken dreams, nothing to show for it. But there was a young man named Levi Strauss who looked at all those miners and thought, these men need durable pants. He didn't dig for gold. He sold them the pants and the tools. He made a fortune. And that story is as relevant today as it was 175 years ago. Because right now there is a gold rush happening in space. And most people are focused entirely on the wrong thing. Everyone is talking about SpaceX. And look, I understand why. It's an extraordinary company. What Elon Musk has built there is genuinely remarkable. And I say that as someone who spent decades watching great businesses get built. The Starlink satellite network alone, the idea of becoming the internet provider and mobile service for the entire planet, that is not a small idea. That is potentially the largest business idea in human history. And the numbers being thrown around, $1.5 trillion, $2 trillion in valuation, those aren't crazy numbers for what SpaceX could eventually become. I'll say that plainly. But here's where I want to slow you down. Because the question I keep hearing is, should I buy SpaceX when it goes public? And the honest answer, the one Wall Street won't give you because they make money whether you win or lose, is this. By the time you get to buy SpaceX, the people who are going to get truly rich from SpaceX are already rich. They've been rich from SpaceX for a decade. The private investors, the venture funds, the insiders, they've already made their 50x, their 100x. The IPO is not the beginning of their story. It's the ending. And you, my friend, are being asked to write them a very nice ending. I've watched this movie before. I watched it with Uber. I watched it with Lyft. I watched it with WeWork. These were companies with real stories, real excitement, real press coverage. And the insiders walked away wonderfully. The people who bought on day one of the IPO, many of them are still waiting to get back to even. Now, I'm not saying SpaceX is WeWork. It absolutely is not. But I am saying that when you pay $2 trillion for anything at all, the burden of proof is enormous. Everything has to go right. Nothing can go wrong. And in my experience, something always goes a little wrong somewhere. There's also something called the lockup period that your broker probably won't explain to you before you hand over your money. When a company goes public, the people who already own shares, the founders, the early investors, the employees are legally prevented from selling for typically about 6 months. So for 6 months, the only sellers in the market are people just like you who bought at the IPO. And then at month 6, the dam breaks. All those insiders have been sitting on paper gains for years. They can finally sell. And many of them do. Not because the company is bad, but because they're human beings who have been watching their net worth locked up for a long time, and they want to do something with it. So very often, 6 months after a major IPO, you see a meaningful drop in the stock price. Not always, but often enough that it's worth knowing about. So where does that leave us? Well, it leaves us in an interesting position. Because if SpaceX's rise means that the entire space economy is about to grow from roughly $500 billion today to somewhere close to $2 trillion by 2035. And I think those projections are quite reasonable. And then there are companies already trading on the public markets right now at much smaller valuations that could benefit enormously. Companies that SpaceX actually needs in order to do what SpaceX does. Companies that don't compete with SpaceX, but grow alongside it. And that's what I want to spend some time on today. because I think there's a genuinely interesting opportunity here for patient investors who are willing to do their homework and manage their risk sensibly. Now, let me be clear about something before we go further. I'm not here to tell you to buy anything. I'm not your financial advisor. And what I'm sharing with you is research and perspective, not a recommendation. Investing in individual stocks, especially smaller, earlier stage companies, involves real risk. You can lose money. That is a real possibility, and you should never invest more than you can afford to lose, or more than makes sense for your overall situation. And what I can do is walk you through how I think about these things, and hopefully that thinking is useful to you. The first company I want to talk about is called Redwire. The ticker is RDW, and when I first heard about this company, the name alone made me curious because it reminded me of the kind of unglamorous, essential business that I've always loved. Think about it this way. Every single spacecraft that goes into orbit needs power. It needs antennas to communicate. It needs structural components to hold itself together. It needs sensors to know where it is and what it's doing. And Redwire builds all of that. Solar arrays, antennas, robotic systems, sensors, and some fascinating manufacturing technology that actually works in the zero-gravity environment of space. Their equipment is running right now on the International Space Station. They've 3D printed objects in orbit. These are not future promises. This is current working technology. What I like about Redwire from a business standpoint is that about 60% of their revenue comes from government contracts. NASA, the Department of Defense. Now, some people hear that and get nervous because government relationships can be slow and bureaucratic, but I've always seen reliable government contracts as one of the better foundations a small company can have. It means you're not chasing customers every quarter. You have predictable work, predictable payment, and a customer who isn't going anywhere. The other 40% comes from commercial clients, private space companies that are planning their own space stations, their own satellite networks, their own missions, and that commercial side is where the real growth story lives. Here's the thing about Redwire that I find compelling. We are entering what I'd call the great build-out of space infrastructure. NASA is preparing to return to the moon. The Department of Defense is spending billions on space-based capabilities. And there are multiple private companies, Axiom, Blue Origin, Voyager, and others, all planning to build commercial space stations to replace the International Space Station when it retires. Around 2030, every single one of those stations is going to need power systems, life support infrastructure, structural components, manufacturing equipment. Redwire is positioned to supply a lot of that. They're not betting on one customer. They're supplying the industry. That's the picks and shovels play. And it's worked for patient investors since the days of Levi Strauss. Redwire is a roughly $2 billion company today. If they win even a handful of the major contracts that are being competed for over the next 3 to 5 years, I can see a path where this becomes a $10 or $20 billion company. That's not a promise. That's a possibility worth understanding. The second company I want to walk through is called Voyager Technologies, and this one has a structure I find particularly interesting for a reason. I'll explain. Most pure space companies have a problem. They spend a lot of money building for the future, and they don't have much cash coming in today to cover those costs. Voyager solved that problem in a smart way. They have two distinct businesses running side by side. The first is a defense and national security business. They build missile defense systems, interceptors, hypersonic missile components, radiation-hardened communications equipment. This is serious in-demand work, and it generates real revenue right now. The second business is the one that gets people excited. They're building a commercial space station called Starlab in partnership with Airbus, specifically designed to replace the International Space Station. After 2030, the International Space Station was launched in 1998. It is old. NASA has been very clear that it will be decommissioned, and they've equally been clear that they want the private sector to step in and fill that void. They don't want America to lose continuous human presence in low Earth orbit. So NASA has awarded development contracts to a small number of private companies to build the next generation of space. stations, and Voyager Starlab is one of the front runners for that. This is not a long shot. This is a company that has already been selected by NASA as a serious contender and has one of the world's great aerospace companies, Airbus, as a partner. What I appreciate most about Voyager's setup is the cash flow discipline. The defense business funds the space ambitions. They're not burning through investor money on a wing and a prayer. There's a real working business underneath the exciting headline. That's exactly the kind of structure I've always respected. A company that doesn't need things to go perfectly in order to survive, but is positioned to do extremely well if things go right. If Starlab becomes the primary space station serving both NASA and commercial customers through the 2030s, the revenue potential for Voyager is extraordinary. Now, let me tell you about a third company that you've almost certainly never heard of, and one that's about as different from Voyager as you can get within the same general industry. It's called Firefly Aerospace. And what I like about Firefly is simple. They actually launch things. Their Alpha rocket has already delivered payloads to orbit. They've landed a spacecraft on the moon. These are not ambitions written in a PowerPoint presentation. This is hardware that has worked in the harshest environment in existence. Their original focus was on the small satellite market, launching smaller, focused payloads at a lower cost than the big rocket providers. But they're growing. They're developing a medium lift launch vehicle that will allow them to compete in a larger segment of the market. And here's something the Department of Defense cares deeply about that most retail investors don't think about: the ability to rapidly deploy satellites in a crisis. If there's a national security emergency and the military needs a satellite in orbit quickly, they can't wait months for a launch slot on a busy rocket. Firefly has positioned itself as a rapid response option for exactly those situations. That's a valuable niche, and the government pays well for valuable niches. The revenue growth here has been genuinely accelerating, which is really the core thing you want to see in an early stage growth company. They have meaningful cash on hand. They're spending less on research and development relative to their revenue than they used to, which tells me they're past the most expensive part of building the core technology and moving toward the part where the business starts working at scale. This is still a speculative investment. I want to be honest about that, but it's the kind of speculation where there's a real business, real customers, and real technology underneath it. Now, I want to spend a moment on something that I think is genuinely important and that most financial media will not take the time to explain to you properly. When you invest in earlier stage companies like these, and I mean any of the ones I've described today, you have to go in with your eyes open about risk. These are not Coca-Cola. They're not See's Candies. They don't have 50 years of predictable earnings. Their business is operating at the frontier of what's possible, which means things will go wrong sometimes. Launches fail, contracts get delayed, government budgets get cut, partnerships fall apart. These are real possibilities, not remote ones. The way I've always managed this is simple. I never put more into any single speculative position that I'm genuinely comfortable losing entirely. Not losing half of, losing entirely. If you wouldn't be able to sleep at night if that position went to zero, you have too much in it. For most people, that means keeping any individual speculative position and the entire space sector as a theme to a small percentage of their overall portfolio. Something in the range of 3 to 5% of what you have invested, enough that if it works spectacularly, it meaningfully improves your outcomes. Small enough that if it doesn't work, your financial future isn't threatened. I want to address something else that I think deserves honest attention. When SpaceX does eventually go public, and I do believe it will, probably within the next couple of years, it is going to generate an enormous amount of excitement, media coverage, social media frenzy, people talking about it everywhere. And there's a reasonable chance that some of that excitement will pull money away from other investments, including smaller space companies, as people sell other things to buy SpaceX. That's a real dynamic worth thinking about. A rising tide doesn't always lift all boats immediately. Sometimes the biggest, most exciting boat in the harbor actually pulls water toward itself in the short term. I'm not saying that will definitely happen. I'm saying it's worth being aware of as you think about timing and position sizing. But here's my broader view on the space economy. And I want to be direct with you because I think it matters. What's happening in space right now is not a stock market story. It's not a meme. It is a genuine technological and economic transformation that will unfold over decades. The ability to put objects into orbit cheaply and reliably, which is essentially what SpaceX has accomplished by dramatically reducing launch costs, is as significant as the building of railroads in the 1800s or the laying of the first internet cables in the 1990s. Every time in history that the cost of moving something has dropped dramatically, enormous new industries were built on top of that cheaper transportation. And we are right at the beginning of that happening in space. Starlink alone, the idea of delivering reliable high-speed internet to every corner of the earth, including places that have never had meaningful connectivity, represents both a business opportunity and a humanitarian one. But beyond Starlink, think about what becomes possible when you can reliably and affordably get things into orbit. Manufacturing in zero gravity, where you can create materials impossible to make on Earth. Earth observation at a scale and resolution that changes agriculture, insurance, weather prediction, and military intelligence simultaneously. Eventually, the mining of resources from asteroids or the moon. These are not science fiction concepts anymore. They are engineering problems that serious companies are working on with serious money. I'm 94 years old. I'm probably not going to see all of this play out to its conclusion. But if I were 40 years old today, looking at what the next 3 decades of the space economy might look like, I would be paying very serious attention. Not with blind optimism, never that, but with the same disciplined curiosity I've always tried to apply to any transformational opportunity. Here's what I leave you with, because I think it's the most important thing I can say. The biggest risk in investing isn't usually the investment itself. It's the investor. It's buying things without understanding them. It's putting in more money than your situation allows. It's panicking when prices drop and selling the very moment you should be patient. And it's chasing excitement without doing the underlying work to understand what you actually own. Every one of the companies I've mentioned today deserves real homework before you put $1 into them. Read their earnings reports, understand where their revenue comes from. Ask yourself what has to be true for this business to be worth much more in 5 years than it is today. And ask yourself what could go wrong and whether you could handle it financially and emotionally if it did. The space economy is real, the opportunity is real, but the discipline and the patience required to benefit from it are just as real. And those things have to come from you. Nobody can give them to you. But if you bring them, if you do the work, manage your risks sensibly, and stay patient while others are being noisy, I think the next decade in space could be one of the more interesting investing environments of my lifetime. And I've seen a few interesting ones. Thank you for spending this time with me today. Now, go do your homework.